Let's talk to Mike Ingram. He's the Chief Market Strategist for WH Ireland. Very good morning to you, Mike, on this wet, miserable Monday morning.
Yeah.
Right, ray of sunshine. What's going on? What's positive in the world right now?
I hesitate to say trade, possibly. I mean, the escalation in rhetoric last week is well documented. Yeah, so you started off with 3 or 4 billion in in tariffs, and it went to 50 billion. Then you retaliate with their own 50 billion. Then Trump comes back with 100 billion. So what's going on now, I think, is quite interesting because there are signs that key EU countries such as France and Germany are trying to talk Trump round, in as much as they too have concerns about how China conducts trade. I understand that. I actually agree with it to some extent. I think it's the way that Trump's going about it. The EU, generally speaking, would like countries to work through bodies such as the World Trade Organization, the WTO, whereas, of course, Trump just likes to fire off a few sort of rancid tweets and whatever and wrong foot the market. So that might be a better outcome, and in as much as it's because the thing is, if you look at if it's just a bilateral trade issue between the US and China, you'd have to say that China has the most to lose. Obviously, they're running I think a $370 billion trade surplus with the US, and their economy as a whole, although they've tried to move it towards more consumption over recent years, is still more dependent on trade than the US, but the US can't play the long game because that's ultimately down to politics. Trump's facing midterms in November. That's probably the reason why he's kicking all of this off right now. But of course, you've got Xi Jinping in China, who's potentially president for life. So he's kind of answerable to no one, controls the media, etc., etc. So, as I say, the US cannot hang out there for too long. That being and on the basis that things need to be done. I mean, when we had, for instance, the US pull out of the Trans-Pacific Partnership, the start of last year, very early, it was literally the first thing that Trump did in his presidency, and then China stepped in at Davos last year and said, "Oh yeah, we're championing free trade." I mean, the face, the cheek of these people, almost, is incredible. So that was never credible in terms of what was going on there and what China said it was doing and what it stood for. But I actually think it's possible. I mean, I'm not even saying it's a 50-50 call at this point, but it's possible that what Trump has done has catalysed a broader discussion about how China conducts itself in international trade. There are issues, no doubt about it, and might be a big if the key players within the EU, such as France, such as Germany, UK may be playing a part there as well, saying, well, do you know what? We hear what you're saying. We understand where you're coming from, but this is a better way of actually achieving, a reform of global trade with China than necessarily just escalating threats, time and time again. And if that pans out, then obviously the market will take that very, very positively indeed.
So in terms of the market, we've got earnings season coming up.
Yeah.
Okay, we've got this volatility. We've seen the VIX go into backwardation earlier this year. Yeah. Where do markets actually go? Have we made the high for the year, do you think? Or do you think we're going to basically rally like a
hope not. That
angel?
wasn't my forecast back in January. I mean, I think, as I said, I think the last time we were here, we were talking about, what's earnings momentum, etc., happening. And at the moment, as I say, most markets, earnings estimates are still going up.
Yep.
I'd have to say as well that most economic forecasts, GDP forecasts, are still going up. There do seem to have been a few clouds on the horizon, however, over the last, couple of weeks. I mean, we know that, for instance, the European PMI seems to have already topped out, although, they're generally in the sort of mid-50s, so there's nothing to worry about there. But people are keeping a close eye on that and saying, well, is this down to things like the weather? There were a lot of people ill in Germany, apparently, during the month of March, for instance. Has that dragged it down? Are we just trying to explain away something which is actually a trend?
Right.
Or is it actually, something, a bit more serious? We had that big non-farm payroll miss in the US on Friday, and that was despite that much stronger ADP number on the previous Wednesday. And if you look at the overall shape of US economic data, again, it still shows decent levels of growth, but it just feels a little bit soft. You had global PMIs, leading indicators; those are also a bit soft, and things like the Baltic Dry Index. And I know that's an incredibly volatile series, but that's down almost 45% from its peak in mid-December.
Right.
It's down a long, long way.
Okay, that's good.
So yeah, so you know, as a possible indicator, maybe lead indicator on world trade, you'd have to go, well, maybe our assumption of, you know, an overall acceleration, a further overall acceleration in the global economy, maybe we need to revisit that. The problem is there's all a circularity, because the more people talk about trade wars, the more cautious the consumer might become,
Yep.
the more cautious businesses might become. And then, of course, you know, you actually bring about the thing, you know, you cause the thing that you were first concerned about. So what's quite interesting is you were talking about things like, you know, earnings, for instance. We're getting into the earnings season now in the US. You've got a lot of key US banks reporting this week, including JP Morgan, Citibank, Bank of America, Wells Fargo. And I'd be quite interested, not only in terms of, you know, what their earnings are, and there, of course, I think the volatility would have helped the trading operations, you know, those banks with substantial investment banking operations would have done quite well in the first quarter, particularly against a very bad fourth quarter. But you'd have to say that the you know, because this steepening of the yield curve basically hasn't happened again. I mean, certainly.
Well, it's flattening, right?
Well, it's certainly the latter half of the quarter, you know, from the middle of Feb onwards, it's flattened again. So, you know, definitely swings and roundabouts, maybe more swings than roundabouts. Don't forget which one's good or bad, swings or roundabouts. Both make you feel sick if you have too much of it. But of course, what's probably more interesting in this is the sort of forward-looking guidance that these banks are going. Well, is loan demand? How can, you know, do people want to invest? Do people want to take out loans? How's the consumer feeling? So, you know, by the end of this week, I'll be very interested to hear, you know, what their take is from their standpoint on the health of the US consumer, for instance, on the health of the global economy. I mean, one thing that people certainly are looking at a little bit edgily is the fact that this is the second longest US economic expansion now on record. And although expansions don't die of old age per se,
Yeah.
the longer it goes on, you know, particularly with, as you just said, some of the income data looking a touch soft, people are going, is this the beginning of the end? So very roundabout way of saying, at the moment, it seems that we've got a decent tailwind, but there are a few data points out there which, you know, we always have to track data carefully, but there are one or two question marks out there which weren't necessarily around a few weeks ago.
On that note, Mike, thank you very much indeed for your time. We'll see you 2 weeks today. That's Mike Ingram. Thank you.